The dark truth behind BlackRock's Bitcoin ETF. The Securities and Exchange Commission, or SEC, has postponed its decisions on several Bitcoin ETF proposals, including those submitted by BlackRock and Valkyrie. But one cannot help but stop to ask a pertinent question. What are BlackRock's goals with Bitcoin, and why are they putting so much effort into getting a Bitcoin ETF approved? Could there be some ulterior motives behind the propaganda? Join us to unravel this and more. 576 approvals, 1 rejection. Among the numerous applicants seeking approval from the SEC for Bitcoin ETFs, one stands out prominently as the most influential and successful: BlackRock. As the world's largest asset manager, overseeing more than $9 trillion in assets, BlackRock boasts an exceptional history of obtaining SEC approvals for its ETFs. According to Bloomberg's Eric Balhunas and Seifert, among the 576 ETFs that BlackRock has submitted to the SEC, only one has faced rejection. A Bitcoin ETF from BlackRock, a global leader and trusted name in investing, would also attract more institutional interest and credibility to the crypto space. In the eyes of the common crypto enthusiast, this information is fantastic. Increased institutional adoption, Bitcoin price goes up, it continues to go mainstream, etc. But what's the catch? What about decentralization? Does it come at a cost to the fundamental function of Bitcoin as a decentralized cryptocurrency? The philosophy of Bitcoin. Bitcoin is more than just a digital currency. It is a symbol of resistance and freedom in a world where institutions are increasingly encroaching on people's rights and choices. People are feeling powerless and frustrated as they see their autonomy and sovereignty being eroded by government policies and regulations. Governments have implemented far-reaching restrictions, mandates, and surveillance over citizens' lives. From how people can travel, to medical decisions, to how parents can raise their children. Such sweeping control contravenes fundamental civil liberties. Bitcoin offers a way for people to regain control. By utilizing decentralized networks governed by code rather than centralized authorities, crypto provides an alternative system outside the traditional power structures. This return to self-determination explains the potent appeal of crypto for many people who feel disenfranchised by institutional coercion. Why a Bitcoin ETF? Now, let's discuss the importance of the Bitcoin ETF. It allows investors to gain exposure to Bitcoin's price movements without directly owning Bitcoin. So, instead of buying and storing Bitcoin directly, which can be challenging and risky, a Bitcoin ETF would let investors access the top cryptocurrency in a more convenient and regulated way. However, a Bitcoin ETF goes against the philosophy of Bitcoin because it introduces intermediaries and centralization to a system that is designed to be peer-to-peer and decentralized. Moreover, it exposes Bitcoin to the risks and regulations of the traditional financial system, such as market manipulation, fraud, custody, liquidity, and investor protection. These are the exact problems Bitcoin was meant to solve. Price exposure tends to be the primary concern for the majority of individuals, overshadowing considerations of sovereignty. An ETF effectively offers this exposure, which underscores its significance for BlackRock. Their primary focus lies in delivering advantages to shareholders and investors, ultimately driving profit growth. Many investors and crypto enthusiasts are hopeful that the SEC will eventually greenlight a Bitcoin ETF, as it would provide a more accessible and regulated way to invest in the leading cryptocurrency. Moreover, lending on Bitcoin will become highly profitable, and institutions like BlackRock are likely to prefer lending against the Bitcoin ETF rather than the Bitcoin itself. This will be a game changer, especially for large investors. The ETF application enables BlackRock to acquire more Bitcoin and dominate the market. BlackRock's confidence in getting the ETF approved is high, given their historical success rate with such applications. BlackRock's ultimate goal is to control Bitcoin and miners, making Bitcoin friendly for financial institutions. They will influence the narrative around Bitcoin, making it ESG friendly and integrating it into various financial services. The expansion of Bitcoin in finance will benefit BlackRock and the entire financial system. This will lead to increased liquidity, and the banking system will love it as Bitcoin borrowing and lending become widespread. Market manipulation. In October 2023, false reports stated BlackRock's Bitcoin ETF was approved, causing Bitcoin's price to spike 5% to $67,000. However, BlackRock refuted this rumor, leading to a rapid price reversal that liquidated over $100 million in leveraged positions. The dramatic volatility highlights the crypto market's sensitivity to news amidst anticipation of an SEC-approved spot Bitcoin ETF. Market manipulation takes various forms. By spreading false information or news stories, manipulators can create a narrative that triggers mass liquidation events or other market reactions. Moreover, crypto is subject to market abuse, which includes disclosure of inside information, prohibiting insider dealing, and unlawful disclosures. However, SEC caution persists, given concerns about potential manipulation and fraud underlying price swings. Would BlackRock find success? The discussion is for those who are contemplating investing in Bitcoin and are concerned about BlackRock's growing influence. It's important to recognize that the ordinary investor is not on the same level as BlackRock when it comes to strategic thinking and professionalism in acquiring assets. BlackRock is known for its strategic and professional approach to asset acquisition, as seen in its investment in carbon trading when ESG, environmental, social, and governance initiatives gain traction. However, ESG investments have not always delivered substantial returns. BlackRock has several options to address this. One strategy that could be unfolding involves making Bitcoin ESG friendly. By doing so, they can include Bitcoin in their ESG portfolio, which could significantly boost returns and improve their image. On possible success with Bitcoin trading, BlackRock has shown a deep understanding of Bitcoin, as evidenced by internal reports leaked in the past. They understand its scarcity and value, so investors can expect efficient management from their end. The ESG propaganda. Looking closely at the antecedents, we can project into the future. Larry Fink has been characterized as an increasingly significant concern to both shareholder capitalism and American democracy due to his fervent advocacy for imposing the principles of ESG, or environmental, social, and governance investing, on companies, investors, and the general public. Imagine if major investment firms could reinvent themselves as impeccably virtuous and community-oriented entities, surpassing even the integrity of their regulatory counterparts. Such an approach would be revolutionary, not only providing investment firms with an expansive avenue for boundless expansion, but also potentially granting companies a form of quasi-governmental authority if strategically executed. The truth is that some enlightened people have started to question the ESG propaganda. They can see that ESG investing is a means of imposing political and ideological agendas on business and investors, and they contend that it encroaches upon the principles of free market and shareholder rights. Furthermore, they harbor skepticism regarding the efficacy and influence of ESG investing in enhancing the environmental and social sustainability of corporate practices, while also questioning the credibility and dependability of ESG ratings and metrics. As a result, BlackRock seems to have changed its mind about ESG investing. For instance, there has been public criticism, concern about profit motives, and pressure from some state regulators. Taking a step back. BlackRock's CEO, Larry Fink, acknowledged that he abandoned the use of the term ESG due to its contentious nature, but he asserted that the company remained committed to addressing ESG concerns. Nevertheless, both BlackRock and Vanguard, once proponents of ESG initiatives, have begun opposing numerous shareholder proposals advocating ESG investing. Certain Republican-led states have initiated investigations into BlackRock and even initiated boycotts against its investments in Texas. However, the funds withdrawn thus far constitute a relatively minor portion of BlackRock's vast assets, and other asset management firms are resisting the anti-ESG movement. BlackRock has lent its support to fewer shareholder proposals centered on environmental and social matters over the past year, citing many of them as excessively stringent. Applause or worry? BlackRock's entry into the Bitcoin space raises both hopes and fears. We can learn from the history of exchanges and custodians in the crypto industry, and how they have behaved in the past. BlackRock, with its huge assets, could try to buy up major stakes in public mining companies and pressure them to censor transactions or force ESG principles on them. This could be bad for Bitcoin's decentralization and security. BlackRock's entry could also boost Bitcoin's price in the short term. It could also help more people adopt Bitcoin, which is usually a good thing. But we've also seen that, over the years, many players in the Bitcoin space have realized that it is better to cooperate than to sabotage. BlackRock's motive is difficult to ascertain, especially if governments get involved with big financial firms. It is a complicated situation, and different people have different views. We need to be careful and watchful, as BlackRock is a powerful and connected financial institution. Drawing from its historical precedents, it is challenging to celebrate BlackRock's recent actions as a significant positive development. At most, they appear to be acting in the best interests of their shareholders and investors. Similar to what we've observed with the promotion of ESG principles, their influence can shape outcomes. However, it's important to note that control and manipulation run counter to the core principles of Bitcoin.